This conference will now be recorded.
Now, Ron, you want to direct this again?
I think so, Chad. I mean, that'll be fine with me.
All right, why don't you do that?
We're going to start with the Capital Resource Corp. In Schoharie County Capital Resource Corp. We have two committee meetings. The first one is the Finance Committee. And number one on the agenda is review and approve the September 17th draft Finance Committee meetings. Peter wasn't available back at that point, but well, I guess, like I said, it's just Wanda and Joe on this.
Move to accept. Move to accept the minutes.
I'll second. Wanda seconding.
So moved. The budget, just two comments, remains the same. With no projects, there's been no revenue. The expenses consist of the insurance, audit, and legal notices, and that's exactly what it has been for several years, and it continues to be. So that would be the budget. The annual self-evaluation, the Finance Committee met once and reviewed the annual budget by line item. Overall, it performed its duties as necessary. At this point in time, if there's not any questions or comments from Wanda and Joe, I would make a motion to adjourn the Finance Committee, or accept a motion to adjourn.
So moved. Wanda.
Second by Joe.
Second.
So move. That concludes the Finance Committee for the CRC. The Audit Committee for the Capital Resource Corp., which has Wanda and Chet on it. I would like to entertain a motion to approve the minutes of 9/17/19 as well.
I move to approve.
I will second that.
Second line item is the biggest reason we're here is the audit review and approval along with the board report. Everybody got it as part of the attachment. And I welcome other comments from other members if they have any under this topic. The report shows the status. There's no surprises or findings. The current fund balance is $34,143. And at this point in time, I know the CRC doesn't have a lot of activity. So if you have any questions or comments, I open the floor, so to speak. If not, I entertain a motion to approve or otherwise by Wanda or Chet.
Motion to approve.
Seconded.
So moved. The next item is assessment of internal controls. These controls we've had in place for several years and they remain the same. I'll read off. The gist of them is we have dual check signers for vouchers or bills. We make board decisions on projects. We have an independent legal opinion on projects. The establishment and following of policies, annual audits, and separation of cash receipts and deposits. As of this date, the audits have not identified any wrongful or suspicious activities, and therefore the members agree that the controls in place are sufficient. If that is agreeable with the members or not, accept comments or approval of the acceptance of the controls.
I
I
move
move to. Seconded.
It's so carried. The last item on the agenda is the committee performance. And again, the audit committee is met when necessary. The only difference with the audit committee is that the full board approved the auditor and the springtime basically as a combined meeting due to COVID. But otherwise, the audit committee performed and met as necessary. Other than that, I accept the motion to adjourn if there's no other comments.
Make a
Move to
motion to
adjourn.
adjourn.
Second.
And now we move to the Capital Resource Corp General Overall Board Meeting. And I'd like to call to order at this point at 9:52 a.m. and review and approve the April 28th, 2020 draft minutes.
I move to approve.
Seconded.
All in favor?
Aye.
This is the
Aye.
entire board, this meeting. And before we go to the performance and measurements, I would just like to state that the audit, if everybody was accepting as a full board, the audit as presented.
I'll move acceptance of the audit.
Thank you, Peter.
Seconded.
And as far as, and to move to the next item is authority mission statement performance measurement. Essentially, it gives a mission statement, which is obviously to help a nonprofit in the county that we're able to help with businesses. The performance for this is the ongoing administration. Right now, we have one project. It's the SUNY Colesville dormitory, which we have to keep track of and report on to the state. And other than that, we would be open to help any nonprofit that was feasible. That would include generally a bigger nonprofit or a bigger project because of the costs associated with it. We could include the hospital. Once in a while, there has been a bond inquiry from them. Nothing's happened in recent years, but we would certainly be open, and we try to let people know that. That's essentially the mission statement and the performance measurement document. Moving on to the project review discussion is the college. The college is doing fine as far as the dormitory goes. As far as I know, they've made their payments. They projected to retain 5 jobs there. They're at 7.85 full-time equivalents. So they've met their, their financial obligations and they met their job requirements. So at this point in time, the college is doing fine with that aspect, i.e. the dormitory, which is good news. At this point in time, if there isn't any discussion for the Capital Resource Corp, I'd make the motion or accept the motion to adjourn.
So moved.
Second.
All in favor?
Aye.
Aye.
That concludes the Capital Resource Corporation meeting. I'd like to open the IDA section. And again, we start with the Finance Committee, and we'll move on to the others as we proceed. For the Finance Committee, for the IDA, we have to review and approve June 23rd, 2020 minutes. And we're back to Wanda and Joe.
I move to approve.
So, and Wanda, would you second?
I'll second, yes.
And so moved. Going forward is the cost versus actual. And again, it's like the other committee meetings, even though Juan and Joe are the committee, since we're doing it with the full board, we would try to do efficiency here. Sure, certainly make any comments or interject with any thoughts. So the cost versus actual budget on the revenue, I'm going to just say a few statements here on what happened. On the revenue side, the interest and earnings did well. We're finally able to at least get up a little bit with the interest, whether it's the CD rates along with the treasurer's bill. The grant income was unplanned at the beginning of the year when we estimated this budget, When we undertook that, Sarah was successful in getting several grants for businesses. So we were, we did well in income by year end, and there was 4 grants. On the downside, the project fees were significantly under the budget as pilots did not occur. The one we approved has not closed yet, and therefore did not, obviously happen in the fiscal year ending June 30th. On the expense side, we did pretty well. The professional services were higher, but that was the grant work we got reimbursed for. A little bit of office supply expense that was higher. The plus side, the expenses were lower by approximately $4,200 on the building, mainly with the new gas boiler, which was using gas, which is cheaper, and the efficiency of replacing a 30-year-old boiler. We did very well. And I think the winter was probably helpful as well with the warmer weather. Overall, we showed in the low teens, which is mainly again to the lack of project income. That will also be, by the way, continuation to be an issue in the current fiscal year until project, which is where we've been at for the last several years. That's essentially my statements on cost versus actual. If anybody has any comments or questions. With that, we're going to the investment policy. It was in the packet. There's no changes at this point.
Excuse me, Ron, there's a lot of background noise. There's a lot of background noise. I'm having a problem hearing it.
Ron, we can't hear you.
No, say it again. I heard you say background noise. There was some background noise. I don't know where it was coming from. Is it clearer now? It seems to be clear.
Sounds like water. It sounds like there's flowing water.
I don't know, Joe. I know what you're saying. I mean, I hear background noise, but
You have flooding,
Hopefully-
upstairs, Joe?
Not to my knowledge.
you hope not. Don't look in the walls. Also, we'll move on and see what happens, as far as the noise goes. But if, all we need to do is reaffirm the investment. If there's any other comments, I think it's appropriate. I mean, we don't have, as an IDA, much choice. The investments are pretty much dictated by the state regs, which is fine. So I'd just like a motion to keep the investment policy as is.
So moved.
That'd be either one.
Second.
Thank you. Again, the annual self-evaluation of the committee. Again, we reviewed the budgets, the budget versus cost and actual, the investments and policy of the agency, and we met as needed due to that. We are also able to review any major transactions, which would be reviewed by the board, which has happened. In essence, that is the self-evaluation. The pilot, I had a pilot on the agenda, and I'm going to reserve to take that out of the finance committee and move to the full board as one of the major topics under the full board discussion. Other than that, I'll take a motion to adjourn the finance committee.
So moved.
Second.
Moving on to the audit committee, which is Wanda and Chet. We can review and approve the minutes from the September 17th, 2009 meeting.
This is Chet. Move to approve.
I'll second.
Moving on to the assessment of internal controls. It's similar to the SCCRC meeting, but I'll just read them off for the record. As part of the IDA audit committee meeting, there are dual check signers, the board decisions on the projects, independent legal opinion, establishment of policies, contracts with the CEO and CFO, annual audits, and separation of cash receipts and deposits. If there's any comments, or if the members do or do not agree to that, are the controls sufficient? I mean, my answer would be yes, as the director, but if anybody has any other comments or wants to add something, feel free.
Does this need a motion to approve?
Which means, yes, just to reaffirm that they're sufficient yet. Would be the motion.
I make the motion.
I'll second.
In this case, Peter, you can't, it's gotta be Wanda.
Okay.
I would second
Sorry,
it.
Peter, I'm glad you're paying attention though. But, so the audit, this is again, when we move to the audit review and approval and the board report, you know, just because, you know, we'll open it up to the whole board, not just the audit committee. Again, as my comments go, there are no findings. There was a best practice recommendation regarding of grant revenues and expenses. It was initially, we did not record the anticipated revenues and expenses. We had them in a lump sum. The auditors wanted them separated. And in fact, we also thought that, you know, it was better to record them later because we didn't know if we'd get all of them until we get them type of issue. We did acquiesce, so to speak, and followed the auditor's comments and did break them apart, and they are in the 630 audit. So they would be, and this will be carried forward. So we followed the recommendation as a best practice, as it turns out. Our IDA's net position decreased by 15,117 from last year. We mostly did the decrease in the revenues. We did offset that partially by a decrease in expenses, and the grants, like I said previously, did help a little bit. I'll open it up to any other comments regarding the audit or questions for me.
I had two, Ron. This is Jeff.
Okay,
On page 15 of the audit, under notes and capital leases receivable, and again, I haven't done audits, but within there, it talks about the aggregate maturities of long-term receivables mature as follows. I know on the liability side, usually it does 5 years and then thereafter. And on note 4 there, it only does 4 years and thereafter. I mean, it's a minor thing, but didn't know if there should be 2021, 2022, 2023, 2024, 2025, and then thereafter. I mean, the total is what it is, but I just didn't know if there should be a 5th year there.
I don't know either, Jeff. I'll have to, you know, I'll follow up with the auditor just to get what their opinion is on that methodology.
Okay. And then I had one other one on page 17. Under note number 10, leases. In the second paragraph there, it says that the IDA is the leaseor in a lease agreement for office space for the period of January through December. Under the lease agreement, the monthly lease payments are $975 and $775 for the calendar year 2019, 2020. I'm wondering whether that should be 2020 and 2019, whether they got them in reverse, because in the next sentence, it's saying that the IDA received rental income of $10,500 and $9,300 for the years ended June 20 and 2019, respectively. It just, I don't know, it just doesn't make sense that, that the
Jeff,
year would be more for 19 per month, but the total for the year is higher when they're showing that there.
they got the years backward.
I think so.
We did raise it. We got to, you know, pump it up during that year, and it was and they switched the years. They got them backwards.
Okay, very good.
I'll note that in the auditor. We will in a minute. Actually, it can be corrected. This is a draft.
Yes.
If there's no other comments on the audit, then I'll move to the annual review of the committee. The committee met as necessary. Again, just as in the other meeting, the code of kind of pushed it into the regular board meeting, the choosing of the auditor. But otherwise, the audit committee did it that as necessary, and its requirements were fulfilled. That being said, make a motion to adjourn the audit committee.
Before you do that, Ron, do you
Okay,
need
go
a
ahead.
motion? Do you need a motion on the audit review?
Yeah, that would be a good idea, Chet, to you and Wanda to approve or whichever you.
So moved.
I'll second.
So carried. Thanks, Chet. And that'll be moved to also the main meeting. At this point in time, I'll move along to the main meeting, the general IDA board meeting. I'd like to call that to order now at 10:07 a.m. And we'll start out by reviewing and approve minutes of the April 28, 2020 meeting. Open to the full board so anybody can chime in.
Move
To
acceptance.
accept.
And so moved. I'll have to take a second. Let me just take a second here. We'll go on now to the annual report. Everybody received a copy of it. And
Yes.
it just, what it does, it goes through the board meeting dates and who attended, the operations and accomplishments, and essentially, and the attachments are the financials. And that's the accomplishments. I just want to mention that we did work with a company. Obviously, we approved the pilot, even though it didn't close. Hopefully it will this year. The procurement of three grants. They did total $275,000 for the three companies. And there was also the micro grant program, which was secured and is ongoing as we speak. Projects undertaken, we're still working on much of the same projects involving the village of Sharon Springs with SSI, Middleburg Meadows in the village of Middleburg, along with ESG and several other ones that have been acquired, along with the loan program. I open it up. I mean, if anybody else has any comments. And we'll go on to the next item. This is the discussion, the request.
Ron,
Sorry, go ahead.
did we approve the minutes?
Yes.
Yes,
We did? Okay. Thank you.
sure. So on the next item is the request for IDA funds by a nonprofit. In this case, essentially the background to this is due to the coronavirus, the governor has allowed IDAs to provide monies to nonprofits out of their reserve funds. The fairgrounds, along with another nonprofit earlier in the year, has inquired about obtaining these funds. The request from the fairgrounds specifically is for $10,000 to purchase sanitizing stations. The request, I'm going to give you a little more background on the grant monies can be used for basically protective equipment as far as COVID is related. So, and they'll be asking for that's why they're asking for sanitizing equipment. And while the SCIDA can at this time make its transaction, which obviously is a worthy cause. The downside is the SCIDA would be using its reserve funds, which we've had to use occasionally for our own operations, i.e. this past year and a couple years ago. You know, we've kind of all touched upon this before, so I guess I'll open it up to discussion on everybody's thoughts.
Ron, is this a request for a loan or a grant?
This is actually a grant, Peter. They requested a grant line. We can do either loans or grants under this. The loans have a maximum of 25,000. The grants are 10. It's an administrative, it's quite an administrative burden doing, well, it could be either one, but particularly loans. So the suggestion has been across other folks that I've talked to, if you're gonna actually dip into your reserve funds, you know, do a grant type activity. It does come with some strings that need to be passed. I mean, you have to analyze their financial statement and see if the business was viable before December 31st last year, or at December 31st, before COVID hit. If the business was viable, they passed that first test. And then do they need it, you know, that they need it otherwise, you know, going forward? Did they get any other help? So it is a review by the board. It was after, you know, as for its final decision. It has been suggested strongly that you'd get another nonprofit, particularly a nonprofit, but another agency to do the review. So it sort of takes it to an independent party. And here's the review of this business, whether it meets our goals or not. And then that review has a recommendation to our board, who then makes a decision on whether to proceed to hand out money. I will say most IDAs in the state have not done this. It's probably 10 or they estimated 10 or 12 of them have. Otsego County is one that has done it. They set a cap of 25 grand. It's at least preliminary. That's what I heard. 25,000 total out of their reserve funds, and I think they set a limit as the dollar amount per business. So they had set up a small grant fund to do so.
Kind of first come, first serve on the applicants.
Well, what we'd have to do is we'd have to advertise it on our website
Okay.
and then provide an application for them, for anybody. But it probably was, I mean, our first request would probably be the one that did request, and the other nonprofit I would have to probably, you know, I certainly would get in contact with again to see if they were still in need to do so.
I would suggest that Jeffrey here, that certainly they're an organization that certainly could use the funds, and in case we had other ones request, and based on your comments to begin with, that we might allow like $5,000, something less than the 10, but certainly try to help them out.
This is Chet. Our reserve funds are operating expense. Yeah, we don't have a lot of them compared to some of the larger IDAs who even opted out of this. I don't know what size reserve fund Cooperstown has to give away 25,000. And you know, you do it once and you're opening up the avenue for the same thing next year. If we're going to do this, I would suggest that we have a maximum amount that we allot, maybe say $10,000, and divide it evenly, you know, maybe 2,500 or something like that. That would give 5 organizations a piece of this, and do it that way. That way we're not depleting our funds.
How much is our reserve fund? I don't remember.
Joe, and I'm not going to be exact here without looking at the audited statements, but somewhere 750, 800,000.
Yes.
Ron, what's the estimated cost for administering these grants?
Well, there will be some. It'll be, you know, be some of our time, depending on who you get to help you with, if you have an independent party, whether they charge or not. And then of course a few dollars for legal fees. So I would estimate it'd probably be a couple grand. It may be as low as 1. but it's probably between 1 and 2. And I would, you know, it was another nonprofit, and I'm not trying to put Mr. Peter Johnson on the spot here, but another nonprofit that's done this and maybe set up to do so is SEEK. You know, incorporate that in their, you know, maybe in their program if we move forward. And I have not asked Julie, and I'm sure because of that, she's not asked her board, but that is a possibility.
To respond to Ron, SEEK has provided a $5,000, what we call our resiliency fund, a grant. I don't think it's unrestricted, but there are certain areas that the fairgrounds indicated were kind of essential for their reopening, so to speak. They have plenty of requests to run things, but it's hard to come up with the proper plans. Now, maybe as things are loosening up a little bit, it'll be easier to do that. So in any case, we provided them with a grant of $5,000. I would imagine some of that will go to the sanitizing hand stations. We've also agreed to lend them $25,000 for operating expenses to get them, to bridge them to next year. So in terms of Ron's request, I think that the SEEK board would be happy to sort of look over the request. Because of our past actions, we probably would, we will look it over certainly, but my sense is we would probably recommend that, that the IDA also participate.
And looking it over, going back, there's, you know, in future reporting to the state, it will be questioned why we thought, you know, the business was going to be viable. I mean, some are going to be obviously one way or the other, one end of the spectrum or other. Some are going to be very easily determined they're viable, and others will not, you know, be easily not.
Yeah.
But you're going to be questioned why you know, we're all going to be questioned why we thought it was a viable business. So it's not just giving away money. It's not going to work out. And then there is reporting requirements at the end, you know, annually for the administrative team of currently Sarah and I to report when it happens, you know, next June 30th. So that's the gist of the effort.
Ron, if we did these, would we do only grants or would we do grants and loans?
You could do either or both. You could actually do both,
But
or just one or the other.
then we gotta, if we make the loans, then we've got to collect the payments and all that, right?
Yes.
One of the things that with the SEEK Resiliency Fund, we've actually dispersed about $54,000 to this point in time. The loans that we've made, and they're actually of the 54,000, I think maybe 10,000 has been in loans. But what we've done is we've done a zero interest loan and require the repayment 1 or 2 years in the future. So there's not an ongoing, you know, did they get their money in by the 10th of the month kind of thing. So it's lessened the administrative burden significantly.
There is going back to the loans, there you cannot charge, and there's no interest, you know, for at least a year. So essentially, you don't make, you know, you don't offset your cost by, you know, making interest. You cannot.
Peter, would SEEK accept money, funds that would be offered to add to your amount that you're giving out?
I think we probably would. One of the things that we're trying to do and hoping to do is to create a stronger partnership with the IDA on things, and I think that would be a way of enhancing that. So if you wanted to flow the money through SEEK, I think we would probably be willing to accept that. I can check on that with the board, but we're eager to be helpful. Our feeling is that the the fairgrounds was such a critical element in Schoharie County that we wanted to make sure that they would be able to get through this period of crisis and be able to function again when things begin to return to normal. So working out an arrangement between SEC and the IDA on this kind of thing, I think is probably easy to do and one that we would embrace.
Chet, are you suggesting that we, that let's say we set aside, I don't know, $10,000, $25,000, and are you suggesting that we ask SEC to administer these funds and answer to the requests for grants that we've received?
Yes, it seemed to me that SEC has already worked out the procedure by which they're administering their funds, and it doesn't make a lot of sense that we have two nonprofits, doing the same type of thing and paying the same costs and all of that. So I don't know how much we want to submit. My suggestion would be 10,000 initially, anyway. And go from there.
Would that work?
Would we need to verify this through the attorney that in fact we could do it to the non-user, I guess, the end user? Ron?
I think you can go as far as have them do everything, including a recommendation, but our board has to actually make the final decision. IDA board has on our money's part.
Okay.
So SEC would analyze it and come, they do their procedure if that's the way it worked out, and then come back and say we recommend X, Y, or Z, and then our board have to say yay or nay to that recommendation.
And then would we give the money directly to, in this case, possibly the fairgrounds, or can we give it directly to SEC?
I think it would probably just go right to the company, fairgrounds in this case.
Okay.
Wanda, am I correct? You're one of the reviewers for the Resiliency Fund, aren't you?
Yes, I am.
And, so we do have pretty good criteria. Some of them adopted from the IDA, as a matter of fact, viability up until December 2019, good balance sheet and that kind of thing. And I think the fairgrounds qualifies for that. So if you'd like the SEC Resiliency Committee to look it over and make a recommendation to the board, I think that could be easily done.
That would be on each individual loan, Ron, that we would look at. I mean, up to $10,000. Okay. I mean, that's, that would be possible from our part. I mean, I'm speaking a little bit here for Jim, but I would think that would be possible.
Well, if we wanted to go forward, what I'd do is I'd hammer out, the legal aspect a little bit more with our attorney, and to make sure we're following whatever we need to follow. And then the bottom line is, if that's where we're headed, what dollar amount do we stick with? 10 for now. It might be 4 companies worth $2,500 each. Just to throw in 2 cents, I'm not in favor. And I'll do whatever. So I'm not saying that, but be careful with the, the dollar amount of the reserve expenses and how much, each project, even if we get help doing it, it's still going to cost money, in the admin time and whatnot. So.
Yeah.
I like Chet's idea.
I don't know. I think some of these companies that are in need, I would suggest that we just do the outright grant, I guess. And if we do it for the 10,000, I mean, we're helping out the community as we can, as opposed to doing the loans.
Oh, yeah.
I agree with not doing the loans, Jeff. I think the admin and chasing people, we know what happens with loans. Doesn't mean history will repeat itself, but the odds aren't good. I think, chasing that money, it's almost, if they really need it, making them pay it back it's not that big an amount.
How does SEEK evaluate and screen applicants to prevent, failure of payment?
Yeah. We do ask for their financial information, balance sheet, profit and loss, that kind of thing, as well as their tax filings for 2018 and 2019. So as I said, though, Chet, I think that the number of loans as opposed to grants have been rather small. They're overwhelmingly grants rather than loans. And part of our concern was that how do you manage that? We want Julie Piketty to go, riding around and start being a creditor for various things. Also, our conversations with other agencies that were doing this kind of thing, it became clear that most people felt that a lot of smaller operations were very reluctant to take on additional debt, and that they could really use the money very, very quickly and very productively. So that's why Jim and Wanda and the other members of the Resiliency Fund Committee have, for the most part, recommended grants and only in a few cases loans, and that the loans are not payable for 2 or 3 years at 0 interest rate. So,
And 6% or 6 months, no payment. I would say 90+% has taken grants for loan.
And are the grants that SEEK are giving out, are they taxable in the future, or are they somehow crafted to where they're non-taxable? But I would assume probably taxable.
These are nonprofits. They wouldn't be taxable, would they?
yeah, I
Well,
think
true if they're nonprofits, but I mean, they would have to show them as income there, but there'd be no tax. Yes, you're right. Yep. Just grant income. Yep.
SEEK is not
So-
all nonprofit. I mean, there's
Yeah.
profit.
Okay, yep.
Different than this.
How many applicants, I don't know if you can tell me this or not, how many applicants has SEEK had and been granted?
I'd say there are about
15,
maybe,
20?
yeah, I think maybe a total of maybe 25, 3 or 4 when we requested the financial information said that they preferred not to provide that and therefore they were dropped from consideration. So I think I think Wanda's right. It's 15 to 20. I saw a list a couple of days ago, but I don't remember the number. The maximum that could be granted was 7,500. Most of them are 2,500 or 5,000, and most of them were businesses rather than not-for-profits. I think I can only remember 2 not-for-profits right now. One was the Iroquois Indian Museum, the other was Middleburg Library. There may be some others in there.
I think you're right on that, Pete. I think that's it.
So the fairgrounds is not a nonprofit?
No,
Oh,
I
they
think
would
they
be.
are. Yeah.
It would be.
Yeah, we considered the fairgrounds aside from the resiliency fund. That was a different thing. We have a different pool of money, which we're calling the impact fund. That money that came from an anonymous donor. So that's the money that's been. I'm sorry. The fairgrounds did receive a resiliency fund grant of $5,000. So there were 3 not-for-profits. The others are all for-profit entities. But in any case, the majority of them are 2,500 to 5,000. But it seems to have made a difference with a lot of small operations.
For the sake of further discussion, I'll go back to my original proposal that we set aside $10,000. In this case, that we offer it to SEEK for their consideration, and that we have $2,500 maxes on it. That way we'd give it to 5 organizations who are in need. And if anybody else came to us that was in a critical stage and we felt that it was more advantageous for us to offer them money, maybe we could do that. But I think at this point we'd be better off with the size reserve that we have to limit it.
I mean, we could up that at some point if we wanted to, right? I mean, we aren't hard and fast on the 10,000.
Correct.
I think it's a great idea.
Good, I agree. And I'm happy to inform Julie Piketty and Tom Putnam and the rest of the SEEK board. There are only 5 of us, so it's not a huge number of people that need to be informed of this, and then get their reactions, but I'm sure we can work out an arrangement very easily.
And Chad, I will go back to the attorney and see what paperwork needs to be done on our end. And then email everybody, let everybody know what that is.
Can I move to approve the recommendation pending any legal considerations that would prevent us from doing that, so we can actually get the money out there?
Good, I'll second that.
I have one last question. Are we going to make it so they could do a loan and a grant, or just a grant, or just a loan? Or we're going to make that stipulation or not? Or is that a SEEK question?
I
Yes,
think
that
just to
would
make
be
it easier for us, I'd say we just do a grant.
Yeah.
I would say that. That's the way I would look towards it.
I would concur with that.
All right, thank you.
Motion is on the floor.
We have a second. Peter seconded it.
Yes.
Oh,
I
you
did.
seconded it? Okay. Great.
All in favor?
Aye.
Aye.
Good proposal.
Carried. Moving on to the project update and review. This is related to what the projects we have a pilot program with are doing as far as their goals, and are they meeting them? The Tennessee, and I'll go by company, there's only 6 of them. Tennessee Gas, the job goal was 2 and they reported 5. Iroquois was 3, they reported 3. Walmart had a goal of 350 jobs. This is full-time equivalent. And their job reported was 576. Schoharie Eagle had 25 as a goal. Their minimum target was 2/3 of that, which is 16. They have only met 12 this past year as of June 30th. I will stay with that topic. Well, let me just run by the other ones, the other 2 first. Middleburg Meadows, 25 job goal as a goal, and I'm working on data collection, so I'll have to review that one in the next meeting. Sharon Springs Inc. was 42 as a job goal, and they have 0. Going back to Schoharie Eagle, they're at 90% of taxes right now as part of their pilot. They have one more 90% of the town and county taxes in January, and then they move to 100%. So that basically the pilot ends. Over the last several years, they've met the minimum barely. I mean, met the minimum isn't 16. And the owner representative, Tom Pignani is, been trying, but he leases the place to 2 agencies, one of which is USDA, the other is FSA. essentially he can only ask them what they're gonna do, and then, they tell them. They're looking to backfill this year some of the positions they did not fill as agencies go, which would bring them up, but that's no guarantee. At this point in time, he's hopeful that they will do that. But as far as the job goes, of course, they did fall short for this end of this year. Based on their efforts in the past, however, I don't recommend, going after them. We have one more tax season to go. They're 90%, and they'll be taken off the pilot right after January, ends, and hopefully by March 1st, the tax status date. So at this point, it's a bit up to the board, but I would recommend that, their effort has been good, and we're closing them out, in several months. So, to not go after, so to speak, or recapture anything at this point.
It would cost us money to pursue a recapture. Is there administrative fees or?
Well, you would probably take an hour or two legal fees and a letter. If you got payment for that recapture, that would end it. If you didn't, and you actually went kept going after, it'd be, it could be up to $10,000 or $12,000. The recapture would be the difference in the amount of money they're saving, versus what they pay.
What would the recapture amount?
They have met the job requirements for 8 or 9 years out of the 10. So I suppose, that benefit for the last year or two would be a couple grand at most, maybe less. So I'm not, the fees are almost equaling the benefit if we were to go after that recapture agreement.
Okay.
Now, this is a state requirement, right? That we recapture if they don't meet their required minimums?
It's certainly suggested that if the company doesn't live up to what they said they were going to do, then the benefits, are in jeopardy, and it's up to the IDA, local IDA, to decide whether the efforts were good enough, or if they were not good enough, you would go after the owner for the benefits they collected. But it's certainly a local decision on whether, for the most part anyway, it's a local decision on whether we think the effort and was made by that company to meet their job requirements.
So legally, it ends with our decision on
What the
that.
cost benefits are.
I think we
Would be in
could
with
set up a file or make a statement to the effect that says the amount that we would recapture is, and I'll use a example amounts is $2,000, and the estimated cost of recovering that $2,000 is $1,800 at a very minimum and possibly higher. Therefore, we as a board decided not to pursue the recapture.
I can calculate that, Joe, and then I'll inform everybody.
But we really don't have to implement that until the pilot is over. Is that correct?
Now we can implement, we could do it any time, actually, Chad, but in this case, the pilot's going to be over in 5 months.
Yes.
So.
Now, Joe, is it important that we note this as we're going along, or can we do it at the end?
Well, we considered it now. Let's note it now and see what the decision. Towards the end, if it's still no job or they're not a number of jobs, then we just implement what we decided.
Okay.
We'll do that. Going on to the 2 other companies, Middleburg Meadows, I know I've been delaying them. They have not done their construction on a new housing portion, and they requested a letter from them, and I will be getting one from the owners of the development regarding any extension or any circumstances what put them in this predicament. So that hopefully will come next meeting. It'll be further discussed. Sharon Springs Inc., as we all know, we extended their pilot and benefits to the end of this year with hopes that the investment and jobs would occur. They will not occur at this point by that fast. They are seeking financing, from a different financial institution. They have hired local people to do the drawings and the business plan and help with securing that financing. And it is those people that will be their representatives, and they too will be giving us a request probably at our next meeting, or I'll request it for the next meeting actually, and we will move forward on that decision at that point in time. So right now they are just in the process of obtaining the or not the financial backing. So both of those will be postponed for further discussion until the next, IDA board meeting. Ongoing review.
What's the status of the consultant that we offered from SUNY SBDC? Is that person still working with them?
He is not. He's on a call basis, Jet. I don't think it's full time. It's not. I don't think his project related businesses. I don't think he's working for him unless called upon.
Okay.
After the bank was recommended, that's where it stopped. He is still available to them if need be.
Is the bank they're pursuing the one he recommended?
Yes.
Okay.
So he was helpful in the past, and he's a good source of information if they take advantage of it, if they need it.
Are we doing the same with them as Schoharie Eagle in terms of meeting job requirements?
Right now, we have to make that decision when we find out more information. We gave them, obviously, we extended their deadline the first time through this year. So we gave them an opportunity to fulfill their obligations. And at this point, it's not going to occur at this point. The decision is going to be whether did they secure the financing, A, and if so, do they have a good plan to finish it within a year? If we so choose that when we review it. If they even secure the financing, there's no way, obviously, they're going to do 3.5 million in construction between October and December. So they will not have a met December 31st goal. And we will be, part of our decision will have to be whether we think they're viable enough or worthy of an opportunity to go into 2021.
Okay.
So that's the project review. The authority mission statement and measurements were in your packet. Essentially, we talked about many of the projects that we're involved with. We're still involved with, Empire State Greenhouses and American Recycling going forward besides the existing projects. American Recycling has been delayed. Hopefully they'll pick back up when they determine if it's viable again. They're in the process of deciding that. So next year's goals are pretty much set, and hopefully there'll be that and plus more if there's other companies that step forward. If anybody else has any comments on that document, feel free. The other two other items on the agenda and one's under other, is the solar pilot. Been working on the solar company in Sharon Springs for months and actually a couple of years now. And there's been other requests. We do not have solar delineated in our pilot agreement, or pilot UTEP as they call it, Uniform Tax Exemption Policy. And talking to the attorney, it seems like a very good idea to put it in there. Companies will know where they stand, and we'll have a policy to go by. After saying that, there's several options that we could choose to move forward with a proposed policy. One would be which to state an absolute dollar cost per megawatt. Some IDAs have done that, and the model they've used is the NYSERDA model, others, which is around $5,500 per megawatt. The county has so far adopted a policy or statement, a resolution saying they want it to be a minimum of $25,000 per megawatt. That's the fixed fee. It goes for the length of the pilot and maybe with an inflation rider or not, and some other variables. The other option for a pilot is to say, we will entertain a pilot, but each municipality for each particular pilot has to agree to the number. So basically working with the municipality to come up with a dollar amount. That way is a little more flexible. It's certainly more work involved by the municipality and us, but it goes by, the benefit is it goes by township and what each town wants and what each jurisdiction wants, the town and the school, along with the county. At this point, I open it for discussion. I will say, I've been in contact with the Energy Committee Chairman, Don Airy. I missed a call this morning. I don't know what additional information he had, but as well as a couple other supervisors as far as this goes. So I think they're still talking about it at the county level. So I don't think at this point we have to make a decision today. I would like to wait until we get more information from their meetings, which should happen maybe even this Friday when they have a board of supervisor meeting, but certainly within the next month or so. But that being said, I would entertain thoughts on this process and which maybe way to go.
Well, the mission statement, our mission statement says that the IDA has 6 stakeholders. One of them is the board of supervisors, but there are others, the residents, the businesses, the not-for-profits, the local workforce, and the state of New York. So given that 2 of these stakeholders have very opposite approaches, New York State has $5,000 per megawatt, and the county board of supervisors has $25,000 per megawatt. I mean, I think that's pretty significant. So I think we need to hash this out, but I think that's we should bear in mind that we don't have to do what the county board of supervisors says, because it's only one of 6 stakeholders. So I'm a little concerned that the state is so low and the county board of supervisors is so high. That's just my concern about this.
Well, there certainly is a discrepancy, Joe. I mean, the numbers are what they are. And that's probably one reason me sitting in this chair is suggesting that, and this is certainly open for discussion and it could be changed, that if we rely on each municipality, you could go to one municipality and say they want full taxation and it could be 50,000 per megawatt. You go to the, 2 townships over, they could say, I don't know, maybe the land's, maybe 10,000 is better than, what we're getting now. And I like the idea. So if you leave it by municipality, at least it gives an option that they can choose a higher number or they don't. It's, part of my, it helps the idea a little bit in the sense of, you can make some ongoing, you have some administrative costs, but you give some administrative fees. So it helps in that way. What it doesn't do, other than that though, we are really doing it as a benefit and trying to help when asked, the municipalities, manage a pilot program. So in that respect, again, I lean back toward, well, what does that municipality want then for a payment? You're right. It could be different. It could be one way or the other. It could be in between that number.
Ron, is there any requirement that we consider for solar farms, any pilot at all?
I do not think we're mandated to, no, Peter. I
Okay.
am quite confident we are not. I could I'll verify that with our attorney. You know, I just don't think we are required. I mean, I don't think there's anything in there.
Yeah, in which case, if we say no, we're not going to do it, the particular solar farm would be taxed at full market value.
Yes, they'd either have to deal, depending on what the municipality or jurisdiction did, whether they opted in or out of the real property tax law. You know, they would have to deal directly with all the municipalities and bypass us, or not do it, I guess.
Yeah.
I think they have the right to deal with the municipalities at that point, or they have a choice now, actually. But good question.
Yeah. The other
But
thing.
didn't the county do some opting where they're trying to throw that on our shoulders?
Yes, what happens, for instance, in the town of Sharon Springs and the school district, et cetera, there, they opted out of and I believe it's real property tax law 487, which if they didn't opt out, they would have the right to negotiate. If they did opt out, which they did, you know, they don't negotiate anymore, and it basically throws it back to the IDA. The county board, you know, I've been working with several of the supervisors, you know, off and on, and as this comes to more of a head, you know, they're in contact. You know, they're want to know if we would, you know, take that role.
It seems to me, one comment, and I've got a question, that there's some buck passing going on here, and the IDA is in the position of being the catcher of the buck. But in addition, it seems to me that a number of the pilots that have been established over time have real and significant numbers of full-time employees that are involved. Certainly the Walmart distribution center is a very large number, and they've succeeded in achieving that number. You know, certainly Middleburg Markets and others have, you know, decent numbers attached to them. Cobleskill Stone does. The number of full-time employees that would result from solar projects is ridiculously small. You're talking essentially about people hired to mow the property over a long period of time. They're not very high-paying jobs. Because my sense is that the company that builds the facility doesn't operate it. They're going to sell out to an operator. So the number of people involved in construction is going to be temporary and is brought primarily in from the outside. So in these very important criteria for pilots, it doesn't seem to me that the solar farms really reach even a minimum position on them. You know, I think we need to find out more about all of that stuff before we catch the buck.
No, as far as job goes, Peter, I mean, you're right, obviously, number of jobs. It's really good for 6 or 9 months with construction, and then it goes away. Presumably it's built. The one in Sharon, which is 50 megawatts, which is obviously 25 times the size of the one you see on Route 20 in Sharon Springs, has 2.5 jobs, full-time equivalent.
Yeah.
So there's your number, and that's for a 50 megawatt project. So job related is obviously what it is. It's not.
Apropos to Peter's comment, what other criteria are there for pilots besides the job requirements, if any? I mean, I think his point is very valid, but are there other factors?
Well, investment's one. I mean, investment and jobs are the two biggest ones. You know, obviously the investment is significant. So that part tends to carry it. And then I mean, that's the two. And then the other requirements are what you make of it. One of our selection criteria is, you know, what the town or all the jurisdictions would like us to do or not do, or do they support it or not. So that's where it becomes, you know, I take case in point, the gas companies. I mean, they also have very low jobs. They've met them and they've done what they said. So one reason, you know, we performed the pilot is because it gave the municipalities and the company, this is what you're going to get for the next 10 years. And it basically kept them out of court. So back years ago, that's why we did the gas companies. It was solidifying the dollar amounts. It was agreed upon, and it kept people from going back and forth and spending legal fees and not getting the money. That's why we did them, as an example.
One of the things I think we have to, if however we go forward on this, is we had this scare with the Walmart pilot where they had mentioned to us that they would, after the pilot was finalized, the recent extension, that they would do certiorari proceedings to lower their tax base. And that would have been, they abandoned that, but that would have been catastrophic. And I think if we ever go forward with a large scale pilot like the solar project, if we ever do it, we have to make sure that they're precluded from doing that.
Right.
Joe, I agree with that point. I think it's hopefully there's an amount that's both fair and does not subject the jurisdictions or the IDA to years of litigation, which would then eat up everybody's reserves. So I think that's one of the factors that we have to consider.
Well, those are the options that are on the table at this point in time. You know, we talk about it individually or whatnot over the next, you know, few weeks, and I'll do a little, you know, research with the legal team. But also, obviously, I'll keep talking to the county, see what the board doesn't do, you know, over the next time period, and then report back.
And one last question on this, Ron. You mentioned that we should have a policy with respect to solar farm. I mean, what if we didn't? Maybe that should be one of the questions for our lawyer.
Yeah, and I've actually asked that, Joe, and it's certainly one of the options. I mean, we could just do nothing, and what would happen essentially is that because our pilot doesn't, unless they go with our standard pilot, which most companies, based on our attorney's comments and what they've dealt with solar, would not do our standard pilot. So if we actually work with a company, we'd be in a deviation, meaning we deviate from our normal policy. And so therefore, we have a policy of tax exempt policy wouldn't be followed, and it'd be, well, why do you deviate all the time is a question. So I'm trying to eliminate, you know, that deviation and saying, this is what we're going to do. And, but I mean, that was the point of that. But it is an option. I mean, going back to your point, it is an option, and you can just deal with them separately. You know, when they come to us, you know, go about just talking to them.
I mean, it's certainly a possibility. It's certainly reasonable, rather, to say solar farms are different. There are no employees, yet they're significant investments. So to deviate is not such a weird thing. I don't know. I'm just throwing this out.
Well, in the case of the municipality and the jurisdictions, if they're entertaining the project, they're looking at future tax revenue on land that's barren now and probably wouldn't yield anything. So basically, we're providing a service to them in putting the thing together. I mean, Ron, would we do anything if we weren't requested to do a pilot?
No, we would not do anything unless we were requested, probably.
But not having
Oh.
a policy wouldn't prevent us from entertaining a pilot for a solar farm. We don't have a policy for, I don't know, maybe breweries specifically, yet we can entertain a pilot for a brewery.
But Ron's proposal really is addressing that, isn't it, Joe? That we review each pilot as it comes through and not establish any type of maximum
That's, yeah,
or
I think
minimum.
reasonable. If that's what he's proposing, I think that's reasonable.
Am I reading that correct? That's what you said, Ron.
Yes, yes. I mean, at least it gives the solar company, this is what we're gonna do.
Okay.
Even though it means we're going to 3 different jurisdictions and, you know, talking to each one and whatever, but that's what we would do anyway, most likely. I mean, we've always done it. We've always gone to the jurisdictions and asked their opinion and what they wanted or don't like about it. So,
I think that's good. It's without, my point was not setting a dollar amount, especially when 2 of our stakeholders are so far apart in dollar amounts. And I think I'd like that flexibility. So that's my whole point.
Ron, do we have any obligation to follow, since we are part of the Board of Supervisors or act in their behalf, to follow their requirement?
No.
no, I don't think, we do not have an obligation legally, I'm correct. Whether, you know, whether we undertake that or not, I mean, we tend to follow what their lead is.
Well, we
Legally,
don't have an obligation to follow the state amount either of $5,000. I mean, that's one of our stakeholders also, New York State. So,
no, they're both suggested.
Okay.
One's a desired amount, one's suggested.
And of course, the state is committed to the elimination of fossil fuel use. Is it 2030 or 2050?
I think it's both, Peter. I think the intermediate goal is 30.
Yeah.
I mean, 2030, and then it goes up to, somehow it gets to 70%. And I'm not sure that's in 10 years or 30 years, but that's their goal, the administration's goal.
Yeah, I guess and in general, I'm very supportive of that idea, but it seems that one of the other stakeholders is being asked to sacrifice a lot in order to achieve that, and maybe harm yet a third stakeholder, which are the people of Schoharie County or the specific jurisdiction. So there has to be a balance among all of these things. And as I look around, I see a lot of wisdom looking back at me. Maybe we can come up with an appropriate balance among all of these things.
I think it's going to be a work in progress, but you know, at this point, like I say, I'll see what the county has to say over the next couple of weeks, and keep looking at some of these questions and get, you know, talk to everybody.
Good.
Come back at it.
I think that's the right way to go about this right now.
If a solar company is looking to come into Schoharie County, do they look for our policy in regard to the fees and all that, or not necessarily, or does it hurt or harm us?
They look at it. I think a lot of them up until now have assumed that the county is going to follow the NYSERDA model. And they're somewhat taken aback when they've kind of let that lag a little bit, and all of a sudden they look at it after some of the other research they've done and you know, zoning and whatnot, and planning. You know, then they get to that pilot and they say, well, the county doesn't follow that. That's one reason why the county wants to get out in front, saying like, this is what we want. And it is, at least as a starting point. So the answer one is they probably do now more than they have, but they've tended to thought, you know, they have that way of thinking that, you know, the NYSERDA model kind of was throughout, you know, all 63 counties in the state, which is not necessarily true. So.
Ron, have you gotten what you needed out of this discussion at this point?
Yes, I'll follow up with some of the points and then let everybody know. And obviously, if somebody thinks of something, give me a call or email, and you know, we can go over it, or I can go find out more. And then we'll come back. You know, we won't drop it necessarily. We'll just come back next meeting and see if we can, you know, gain some more. So the answer is yes.
Yeah.
Okay.
Good discussion.
Yes.
Yes. I hope it comes out. Not just technology. The last item on it that I had was just to, there's a long way of number 8 of saying, I'd like to approve the audit in the full board. So if there's any discussion, and if not, a motion to accept or approve the audit as submitted with hopefully that one, you know, one comment by Jeff particularly.
I move to accept.
I'll second that.
All in favor?
Aye.
Aye.
That's all I have. We can think about a next meeting date. Probably be the 16th, maybe middle, late October, depending on what happens.
Good.
Do you want to set that now, Ron?
Well, sure, we can have a target date. Does there anybody think about the last week in October?
That
Yeah,
should work.
That's good for
November,
me.
whatever, everybody.
Any date? 28th? How about that? I'll throw that out. Wednesday.
Sure. With me, I'm here.
What time?
What time?
Same time?
Want to go back to 9:30 or?
Yeah, 9:30 is fine.
Yep, works for me.
All right, we'll aim for that date then. We'll send something out a couple weeks before that, make sure everybody's still good with it, and then go.
Good.
Okay.
We'll make a motion to adjourn.
So
So
moved.
moved. Second.
I guess the meeting's adjourned at this point in time at 11:10.
Okay. Thank
Great.
you all.
Thank you.